Investors and traders, welcome to the channel Market Chart Pattern. Today is 21st of June 2024. Hope everyone is having a great day. So this video is going to be a little different video because we will actually also take a look at the shorter time intraday time frames, and I'm going to actually show you how these patterns that we look at, the one-to-one price projections ABCD, and in particular these ranges that I give out for weekly levels, and also when we do the intraday updates, the daily ranges as well, how these standard deviations fit into the model or the framework that I'm actually trying to show you guys here on YouTube through my videos. So I think you'll find this pretty interesting, how these patterns actually work on all time frames, and we'll actually be taking a look at 5-minute charts, so really short-term intraday. And this is the daily ranges that were for today, and we will actually make use of these. Okay, so before that we move on to the intraday time frames, just taking a look at our timing model. We have a date coming today, 21st of June. I believe this to be a minor timing, but nonetheless it is a timing which is coming in, and our timing model has actually picked up a really key turning points in the market in the past, so we should be paying attention to that. And also the bigger one is the 1st of July. So in between next week time frame, there is a possibility we could see the major averages actually pull back a little bit. We'll actually do a further analysis of that in our weekend review, but from the timing perspective, next week is really key, and with timing, as always, we have to give it 1 to 2 trading days on either side. So really important week coming up next week in my opinion. All right, okay, so what I'm going to do is let's move on to this chart. This is the intraday, and let's start with the NASDAQ 100 futures, right? And here, one of the things, let me actually bring over the daily ranges that we were expecting for this market. And I believe also today was a quad witching or something like that, so it was kind of expected to be a range bound market per my research, that whenever we have this kind of options expiry event happening, the market is pretty erratic. So therefore, anyone who is looking to be a short-term trader should do a lot of preparation for this kind of eventuality in the market. So this will help you prepare. And what we have are these standard deviation levels. So +1, +2, -1, -2 standard deviation. Now the market had actually been coming down for the last few days, as for example yesterday, and what we could also be taking a look at as a point of interest, if at the open, which is the regular trading hours, the market could actually pull back a little bit further. So the level that we would really watch is the -1 standard deviation, which is 19,914 and a quarter. So we just mark this. So I'll show you how we can actually go and mark our chart with key things that we should be looking at. So the first thing is that electronic trading hours open. So we go and mark that as a point when the electronic markets opened, which would be the night before for the regular trading hours. We can go and actually also mark the regular trading hours open here, and then the standard deviation level, which was the -1 standard deviation level. We should go and mark that on the chart as well, or actually just make a mental note of it as well, but marking it on the chart will actually help us visualize it. So 19,914 was the -1 standard deviation, and this is exactly where the market went. So guys, just pay attention to these levels really carefully. But we should also be looking for other things that might be happening around that key sort of a level that we are watching. So one of the things is, from a pattern perspective, we have this one ABCD one-to-one price projection which is coming nearby, and also we had this 1.272 expansion of this BC swing, which came around 19,921. So we had three things. We had the ABCD, which was actually a little bit lower, around 19,010 roughly. We had 19,914 as the minus one standard deviation level per our calculations for the daily ranges, and we also had this ABCD marked in blue. So a confluence of three things coming together. And look what the market did. I believe there was some news event out as well. So there was a fair amount of volatility in the market, but it hit that level, and this is where the buyers snapped in. So the buyers came in, they started to buy the market. The market actually went fairly high. This would tell us that, okay, these are 5 minutes chart, 5, 10, 15, 20, 25. For half an hour almost, the market is actually moving higher. Now, one of the things is that the first 30 minutes of the trading day usually mark, there's a chance, about 50% chance that they mark the low or the high of the day. And then there is another further chance for when the full trading day, 1 hour of the trading has happened, so around 10:30 Eastern Time, New York. There is a further 30% chance, so about 80% chance that the market might have actually topped or made a bottom. So these are some statistics which you can also Google about, but these are at times fairly reliable. So the market actually, if you missed this one, gave another chance where it retraced down right here. I believe this looks like to be a 61.8% retracement. Let me actually try to draw this. Here we go. And there we go. So another chance coming around 61.8% retracement. And the other thing is that if you just missed that, let's say for example you did not even draw the retracement, but look, these are 5 minute candles, 5, 10, 15. So for 15 minutes the market just went in a trading range sideways. But what is important is that this level around 19,943 was turning out to be a pretty substantial support level, because the market was rejecting lower prices. And then what did the market do? It went right back into this, which is the electronic trading open from the previous night. And further, there were ABCDs around here. There are further relationships which I haven't drawn in terms of expansion. But once it started to actually find support from the standard deviation, minus one standard deviation, and all these patterns, then we were actually looking for the market to start to rally. And what did it do? It just went right to its electronic open. That's where we also had this ABCD, the one you can see in black around here. And before that, you can also have a look at this red one. This is where the market actually pulled back quite a bit actually. And this turned out to be the high for the day. And after that, what did the market do? It went right back to its support around here, which also happens to be 78.6% retracement of the day's low to the day's high, and also a 1.272 expansion of from this low to this high. So just wanted to show you guys that the kind of framework that we are using with these pattern recognition, Fibonacci retracement and expansions, how useful it is to actually also use statistical part of it, which is the standard deviation levels that I try to give out, for sure on the weekly basis, but also when we do the intraday analysis, then I also give that out for the next day. So you have seen that how precise this level was, minus one standard deviation, 19,914, and what the market did for the NASDAQ. Now I think I'll do a video in which I'll show you how I work these levels out. But and also one of the things is that other people use slightly different methods. So some of these levels could be different for different people, especially for example if they're using a different volatility index, for example. And also if you have got the options pricing data in front of you, you could have actually a little bit more up-to-date information available to you through that. Now let's take a look on the ES as well. Intraday, again, a 5-minute chart. This is slightly different because here the -1 standard deviation was way below. It was 55.05, and the market did not go anywhere close to that. It was fairly higher, which was also an indication, in my opinion, that it was a little bit stronger compared to the NASDAQ. But also, if when you're watching the intraday price action, although they're with different markets, but sometimes one market will begin to lead. And I believe when the NASDAQ 100 hit its -1 standard deviation level, that's where you got the clue that the strength is coming in into the ES as well, which is the S&P 500 E-mini. And look at this candle formation within the first 5 minutes at the 0945. It was just telling you that the buyers stepped in, and the price was rejecting lower prices. But there were a few other things which were telling us something. And you look at this brown ABCD 1-to-1 price projection, the low came in around 55.19, and the exact low was 55.19. Wow. So 55.19 and a quarter, and the actual low was 55.19 even. This is the power of this ABCD 1-to-1 price projection. These are pretty powerful things. Now, just around that, a little bit higher though, 55.22. We also had the 1.272 expansion, so we knew that we have a confluence of 1-to-1 price projection ABCD pattern and 1.272 expansion. So this is the zone or the region that we should pay close attention to, and this is where we saw buyers step in, and then we got another chance where just the market actually retraced lower, and then for the next 15 minutes it just held this support, and then what we have seen is actually a move higher. And just like the NASDAQ, what did the price do? It just went back right to the electronic trading hours open. So this line you see, these are electronic trading hours open. And after that, if you just draw a ABCD, which is a blue line, it was just pointing to that level as well. So the market missed it by maybe a tick or so. So let's see, a high was 55.45 and 3/4, so spot 75. So it just missed it by a tick. So there you go. I just wanted to show you guys that when we look at on longer term time frames, such as the daily, weekly, these patterns work equally well, and sometimes even, in my opinion, because the market is so fluid on shorter time frames, even better. You can see that this ABCD is just amazing, and the blue one is just picking the turning points really well. And yeah, there you go. And all this, what we see between the regular trading open hours and electronic, this is basically just market moving. It's you could actually look at it as noise as well, in the sense that we know that the structure the market is following. So I just wanted to show you guys that these daily trading ranges, the weekly trading ranges, pay attention to these, because specific things happen at these levels, and especially for the weekly ranges. If the market, any market, is hitting the -2 standard deviation, for example, that's not normal. That doesn't happen that much. So that becomes an early indication that, okay, there are really heavy sellers stepping into this. And similar kind of thing also works for the +2 standard deviation, which means that the market has actually moved higher really quickly, creating an imbalance. And what will happen is that a pullback becomes likely, because the market will need to catch up with the mean, or the mean needs to catch up with the market because it moved too quickly. All right, okay, so that's a discussion for another day, but just wanted to show you guys how these patterns also work rather pretty nicely on shorter time frames as well. Okay, so now we'll just have a really quick look at the S&P 500 daily cash market, and here we can see that this market has reached a daily target, but I think it has got further to go. 56, 60 was kind of the level that we're looking at. We'll discuss more of this when we do our weekly chart analysis. I just wanted to make use of the time today and also to look at some of the markets, such as the bond market, because that way we'll just save some time for the weekend review, and then we'll be able to take a look at the sectors. Otherwise, the videos get really long. All right. So I hope you guys will not mind. Okay. So let's start with the U.S. 2-year Treasury note. This is the shorter end of the curve. And here we are taking a look at the 2-year Treasury note. The Fed really watches 2-year Treasury note very carefully. So this is why it's pretty important. Now, what we believe or what we think is that we have this head and shoulder pattern which is in place, and the market is moving in this big ABCD black cycle, and in fact we can see the yields as low as 3.9%. However, the market is not going to move in a straight line down. So what is happening is that this 38.2%, which comes around 4.7%, is it's acting as a support level. There is some structural support here as well. So the market comes and tests this level, then it goes and tests the upper part of the range. So it's basically a range bound market, but it is causing a fair amount of volatility in some other markets such as the stock indices. So if when we begin to get a clean break of this, I think then we could actually accelerate lower. And of course, we have this trend line, which is this one in place. So this will become like a target where it's going to go and test, and maybe we will find some support, and we could see the yields move a little bit higher, maybe right into this part, which is acting as support right now, but might turn into resistance. But the chances are that we are in fact in this CD leg lower right to 3.9%. Okay, and then if we move to the longer end of the curve, so by taking a look at the long bond futures, so this is the Treasury bond futures 30-year. It's a pretty long duration, that's why it's called long bond futures. And here the really interesting part is that we broke above this channel formation here. We moved back into it for a couple of days, and this price action, I did not like that at all. And the good thing is that it was just a couple of days and it just reversed. This is a lot of volatility in this market because this bond market is a pretty big market. It's not as big as the 10-year Treasury note, but it's a massive market. It's bigger than the stock indices. So a lot of volatility when you have like a couple of points move in one day. All right. So now where we are and where we are in our trading range like this, to see this kind of price action in this market of this size is not very usual. It's just a sideways range bound market, and these are like a range of about a point and a half, which is pretty large for but the bond market. But you don't see this kind of pattern market going this sideways very often in this market. Bonds trend, treasury markets trend, it's usually the big players which come into this market. Is very little retail. Okay, so one of the reasons happening is because we have the one-to-one price projection around here. On top of it, around 120.31 is also the 61.8% retracement. So the fair amount of resistance just overhead. But again, we believe or we think that we are actually in this leg, CD leg higher, which could see the market move as high as 131 and maybe a little bit higher around 132. And again, it will still be a bear market. You can see that how the kind of damage that has been done. Now, yeah, for sure it can move even higher, but for now this is what we are projecting. And the key thing is that the market remains above these channels, and these support levels around 114, they keep intact, and the chances are we are in the CD leg higher. So what does it mean? Rates on the longer end of the curve are expected to also move lower, just what we have seen in the 2-year Treasury note. Now let's take a look at the TLT. This is the ETF for 20 plus year Treasury bonds. It has a similar pattern to what we have in the 30-year, because this is also longer duration. and it remains above the 92.40. That was a key level that we were watching. It's doing a similar kind of pattern formation to the 30-year bond, but ultimately we think that we are in the CD-like higher, in the brown cycle, and 104.16 is the kind of level that we're watching to 105.60. 1.6 minute expansion is a little bit higher, but that's the kind of range we'll be watching. So we'll be keeping a keen eye on what's happening with the yields, because that's really important. Okay, and just last part of it, we'll just have a very quick look at the dollar as well, because I want to cover this more in our weekly analysis, and we can see that the dollar is actually pretty firm. And now the chances are that 107 level that we were watching as a potential high, because of double top here, it might actually get challenged, and we might be looks like on the weekly chart. We'll have a look on the over the weekend. We are in a leg higher, where we could actually see dollar move top of my head around 109, 110. So this is what it looks like. The dollar seems to be moving higher. Now the stocks are moving higher, dollar moving higher. That's a pretty interesting correlation, and soon one of these correlations is going to break, because these correlations, they come and go, and dollar higher, stocks higher. This kind of correlation doesn't exist for a long time. Now, this has been a pretty unusual time period in 2024, because we have seen the stocks move much higher, but we have also seen the dollar pretty firm. And if you just look at it, the dollar is in a big range, it's in a 6 point range thus far. So this just shows that there is so much demand for the US denominated assets. So, there are like not such good things such as wars going on in certain parts of the world. So the money seems to be flowing into assets which could be considered safe assets. So maybe there's a buying going on for the US assets, and you can buy the US assets from US dollar. So strengthen the US dollar. And of course, the equities are also assets, so there is buying of the equities as well. So it's pretty interesting what is going on. um, Sooner or later, one of these things is going to break. So I'll keep you guys updated. Thank you for watching the video. Stay tuned for the video that will come over the weekend. Good luck, good trading, and if you like our analysis in this video, give it a thumbs up, and also subscribe to the channel, and speak to you guys soon.